What if your car is quietly keeping you broke and you don't even realize it? Most Americans think the cost of a car is simply the monthly payment, but the real cost can include depreciation, insurance, fuel, repairs, and interest, and together they can steal thousands from your future. The surprising part, the biggest mistake isn't buying a car, it's buying more car than your financial life can support. Welcome to American Dream Finance. In this video, we'll break down the real cost, show you how to cut it, and reveal what to do with the money you save. Stay until the end because one simple decision could change how you buy your next car and how fast you build wealth. The problem: why car ownership can keep you broke. For many Americans, the biggest threat to building wealth isn't a daily coffee or an occasional restaurant meal. It's a much larger expense that can quietly drain money every month, owning more car than you actually need or can comfortably afford. And the problem isn't simply the price on the windshield. When you buy a car, you're also paying for depreciation, insurance, fuel, maintenance, registration, taxes, and financing costs. Add those together, and the real cost can be far higher than the monthly payment you see at the dealership. This is where many people get trapped. A car payment of $500 might sound manageable, but once you add $150 for insurance, $200 for gas, registration, maintenance, and other costs, that $500 car can easily become an $800 plus monthly expense. That's thousands of dollars every year. And here's the part that matters most. A car is usually a tool for transportation, not an investment. Unlike an asset that can potentially grow in value, most vehicles lose value as they age and accumulate miles. The moment you drive a new car away from the dealership, you're no longer buying the same asset you saw sitting on the showroom floor. New car depreciation can be substantial, although the exact amount varies widely by vehicle. That's why the original idea that every new car instantly loses exactly 10 or 15% isn't a rule you should rely on. Depreciation depends on the vehicle, market conditions, mileage, condition, and demand. There's another mistake Americans often make: focusing only on the monthly payment. A salesperson can make an expensive car look affordable by stretching the loan over more years. You may see a lower monthly payment, but you can end up paying more total interest and carrying the loan for much longer. For example, imagine two people can afford roughly the same monthly payment. One buys a $25,000 used vehicle with a shorter loan. The other buys a $45,000 vehicle and stretches the financing to make the payment look manageable. They may feel like they're making similar monthly commitments, but financially, they're living very different lives. The second person has tied up far more of their future income in a depreciating asset, and that money has an opportunity cost. Every dollar going toward a car payment, interest, insurance, and unnecessary upgrades is a dollar that can't simultaneously go toward an emergency fund, paying down expensive debt, investing for retirement, or building a taxable investment account. This is why I don't look at a car as simply, can I make the payment? The better question is,
what is this car going to cost me in total? And what am I giving up to own it? That's the question that can completely change the way you shop for a vehicle. And there is one more psychological trap worth understanding. Cars are visible. Your retirement account isn't. Your brokerage account isn't. Your emergency fund isn't. Nobody pulls up next to you at a red light and compliments your 401k. But people notice the new SUV, the luxury sedan, or the expensive truck. That makes cars particularly dangerous for people who are trying to look financially successful before they actually are financially secure. You don't have to drive an old car forever. You don't have to avoid financing completely. And you don't need to feel guilty about owning a reliable vehicle. The real goal is much simpler. Don't let your car consume the money you need to build your future. Because the biggest cost isn't just what you pay for the vehicle. It's the wealth you could have built with that money instead. That is the real wealth-killing mistake. The solution isn't to find the cheapest car on the market, it's to make the total cost of transportation fit your financial life. Start with one simple rule. Don't shop for a car based on the maximum monthly payment a lender says you can handle. Set your own budget before you visit the dealership. Look at the full monthly cost: payment, insurance, fuel, maintenance, registration, and parking if applicable. Then compare that number with your take-home pay and your other financial goals. If the car payment looks affordable only because you're using a long loan term, that's a warning sign. Next, think carefully about whether you actually need a brand new vehicle. A relatively recent used car can sometimes offer a better balance between purchase price, depreciation, reliability, and modern features. But don't blindly follow the idea that exactly 3 or 4 years old is always the perfect age. The right used car depends on its price, condition, mileage, reliability history, and maintenance records. For example, a well-maintained 6-year-old vehicle with a strong reliability record could be a better financial decision than a poorly maintained 3-year-old vehicle. Before buying, get the vehicle history, check for recalls, inspect the condition, and when possible, pay for an independent pre-purchase inspection. That small expense can be worth it when you're making a purchase worth tens of thousands of dollars. Now, let's talk about financing. If you need a loan, compare offers before you walk into the dealership. Get a few quotes from banks or credit unions and understand the APR, loan term, total interest, and total amount you'll pay. Don't judge the deal by the monthly payment alone, and be careful with loan terms that stretch for many years just to make an expensive vehicle appear affordable. Here's another important move. Shop for insurance every year or two. Your current insurer isn't necessarily giving you the lowest rate forever. Get quotes from several reputable insurers for the same coverage levels and compare the actual policies, not just the price. Also review your deductible, coverage limits, and available discounts. But don't reduce important coverage simply to save a few dollars. The goal is to find good protection at a competitive price, not the cheapest policy possible. Then look at the number of vehicles in your household. If 2 adults genuinely need 2 cars, that's fine. But if your household has 3 or 4 vehicles and one of them spends most of the month sitting in the driveway, calculate what that extra vehicle is costing you. Insurance, registration, maintenance, repairs, depreciation. Those expenses continue even when the car isn't moving. And don't forget maintenance. You don't need to become a professional mechanic, but learning a few basic things can help you avoid unnecessary expenses and make better decisions. Knowing how to check tire pressure, understand your maintenance schedule, recognize warning signs, and compare repair estimates can make a real difference. For more complicated repairs, get multiple estimates and ask the shop to explain what actually needs to be repaired. And here's one of the biggest changes you can make. Stop treating your car payment as the entire cost of your car. If your payment is $550, your car doesn't cost $550 a month. Your real transportation cost might be significantly higher. Once you calculate that number honestly, your next car buying decision becomes much easier. Maybe you discover that the $35,000 vehicle you wanted doesn't fit your goals. Maybe a reliable $22,000 vehicle does. Or maybe keeping your current car for another 2 or 3 years is the smartest financial move. That's the mindset shift. The goal isn't to own the cheapest car. The goal is to keep transportation from controlling your finances. Because every dollar you don't waste on unnecessary vehicle costs can potentially be redirected towards something that actually builds financial security: your emergency fund, your retirement account, your investments, or simply reducing debt. The car should serve your financial plan. Your financial plan shouldn't exist to serve your car. Today, don't start by looking for a new car. Start by finding out what your current car is actually costing you. Open your bank and credit card statements from the last 3 months. Write down your average monthly spending on car payment, insurance, gas, maintenance and repairs, registration, and other vehicle fees. Then add those numbers together. Don't estimate, use your actual spending. You might be surprised by the result. Next, look at your current car loan, if you have one. Check the remaining balance, interest rate, and months left on the loan.
Then ask yourself one uncomfortable question. If I didn't already own this car, would I choose to buy it today at its current cost? That question can reveal whether you're keeping a vehicle because it genuinely makes financial sense or simply because you've become accustomed to the payment. If you're planning to buy a car soon, set your total budget before you start shopping. Don't let the dealership determine your budget for you. Compare financing offers, get insurance quotes, research the vehicle's reliability and expected ownership costs, and most importantly, compare the total cost of ownership, not just the sticker price or monthly payment. If you already have a reliable car, keeping it longer can sometimes be one of the simplest ways to avoid another round of depreciation, financing, taxes, and fees. But don't turn that into another extreme rule. If your current vehicle is becoming unreliable, unsafe, or unusually expensive to repair, replacing it can make financial sense. The goal is not to keep an old car at any cost. The goal is to make a deliberate financial decision instead of an emotional one. And here's the bigger lesson. Imagine you reduce your transportation costs by even $300 a month. That's $3,600 a year. If that money is consistently redirected toward an emergency fund, debt repayment, or long-term investing, the impact can extend far beyond the first year. That's where the real opportunity is. You aren't just saving money on a car, you're creating money that can start working somewhere else. So before you upgrade your vehicle, ask yourself, do I need it? Can I comfortably afford the total cost? Could I buy a less expensive vehicle that meets the same need? And what could this difference become if I invested or saved it instead? Because financial freedom rarely comes from one huge decision. It usually comes from repeatedly making better decisions with ordinary amounts of money. A car is necessary for many Americans, but an expensive car is not. The key lesson is simple. Buy the transportation you need, not the status you want. And if you can keep one of your largest recurring expenses under control, you give yourself something far more valuable than a nicer driveway. You give your money room to build your future.